Hey guys, so the weather is feeling a lot better outside, and for a lot of you, it's your favorite time of year. College football is upon us, a great weekend ahead, but you know what else is cooling down, and that's the markets in terms of the economy, which is also cooling down interest rates. So this week we've had a lot of information about the jobs market, some data that's been coming out. We've been waiting on the big report today. The BLS jobs report showed that jobs increased a little bit more than expected. But also there was some adjustments over the last couple of months from June and July, revising those numbers down. So I was watching a couple of segments on CNBC, and even some of the pundits that have been really bullish on the economy, really talking about how interest rates are going to continue to rise and rise and rise and rise, and Armageddon and the housing market's going to crash and all those types of things. Even they are beginning to pull back a little bit. They're starting to see, I think, that recession is looming, that the economy is definitely slowing down. And so, you know, I'm getting the feeling that this wave is about to start in terms of interest rates coming down. We've seen interest rates slowly drip down this week. The bond market is in our favor today. Interest rates are dropping a little bit today. But I can't tell you, again, as we've mentioned before, I can't tell you what's going to happen, tomorrow, next week, week to week. But over the long haul, rates are dropping. And the feeling that I have, the fear that I have, is that there are so many people on the sidelines right now, and they're waiting. They're waiting. And I'm like, what are you waiting for? Because as rates drop, and that becomes the headline, because that will become the headline, that'll be the focus. And when the focus is on the interest rates after they've dropped, then there's going to be a flood of people that are coming into the markets. And you and I both know that inventory being where it's at right now, that's going to continue. That's not going to catch up. Inventory is not going to catch up in time for the demand. And what's going to happen to prices? They're going to continue to go up. Some in some markets are going to be exacerbated even more than others. And so my fear is that those that are thinking about being in the market, thinking about a house, and they're waiting for the right time, they're actually waiting for the wrong time, because now's the time to grab that tiger by the tail. We need to start talking to consumers and whatever's keeping them from jumping in the market. Certainly if it's interest rates, there's a lot of things that we can do. We've talked about 1-0 buy downs, 2-0 buy downs, 3-2-1 buy downs. Right now, what's being more popular, we're beginning to see more 1-0 buy downs. What's a 1-0 buy down? That means basically you can buy down the rate temporarily for 1 year, 1%. So if right now your interest rate's at 7%, we could get an interest rate at 6% or 5.99%, and the difference between, say, on a $350,000 loan, the difference is going to be like, let's say it's a $270 some odd, $280 payment decrease in their payments for that first year. You take that times 12, you're only talking about less than $3,000, talking about maybe $2,800, $2,700. I don't have it in my head, but you can understand the point of that is that paying those temporary points that the seller can pay for, you can actually, we can get the lender to pay for that. There's a difference in how the economy works and how that affects the borrower down the road. We could talk about those details, but the bottom line is, if you do the temporary buy down, you're getting a lot more bang for your buck. For that $2,700, for example, that would get you a 1% reduction, versus if you bought a permanent buy down, that may only get you from like 6.99 to like 6.7 something, or 6.5 maybe. And so the point of this is that we can educate our borrowers that there are these tools out there that we can either bake into the contract, get the seller to pay for, it stays with them, and then when rates drop next year, then that might be the time to buy a permanent rate, and you're going to get a rate into the 4s or even better. So there's ways to mitigate some of the anxiety that a lot of buyers are having right now, especially if it's about the interest rates. The timing is everything. Timing is now. So let's get together, let's talk about that. Let's help these buyers that are on the sidelines get a little more confidence in buying from you and listing from you and moving on and positioning themselves for success in 2024. You guys have a great weekend. Enjoy the weather, enjoy the football. Hope your team wins this weekend, and you guys have a great one.